Dr. Babasaheb Ambedkar Open University.
Hello, welcome once again in the certificate course Basics of Accounting. Today we are going to discuss cash book, that is module number 7. Cash book itself explain what is the changes of cash book in the accounting transactions. Cash book it includes all the cash transactions in the respected books. It means that this word itself explains that the which type of transactions are covered in the particular book. Here in this particular module, we are supposed to discuss the what type of cash and bank transactions are supposed to be recorded systematically in various types of books in the particular chapter. So here let's move to the discussion of the cash book. Cash book is the most important type of a subsidiary books. It's almost a part of a subsidiary book. As the subsidiary books, we are preparing for a purchase books, sales books, bills books, purchase returns and sales returns. In the same way, for cash transactions and the bank transactions, in the case of a trader, sole trader or a proprietor having more transactions regarding the cash and bank, they are preparing a separate book for the cash and bank transactions. This is what all about a cash book. Generally, in any particular business or profession, there are two types of transactions. One is cash transactions and other one is a credit transactions. Credit transactions are generally recorded in a journal proper, but in all cash transactions are going to record if you prepared a cash book separately. So credit transactions also get corrected in cash transactions in the very near future. Cash book is prepared to keep record of cash transactions, and cash book is a type of a subsidiary book, as I already mentioned earlier. In all the type of cash transactions and bank transactions are supposed to be recorded in the cash book systematically. Cash receipts and payments are recorded in the cash book. So the cash balances and bank balances are supposed to be disclosed at the time of when it is required. Here just see how the cash books are actually provide facilities and serving the situations regarding the part of entries when it would be recorded in the books of accounts. So here the cash books are serves a purpose of a journal entry and cash book both as it is to be recorded. Here I just want to explain, see the particular specimen of cash book, where in the specimen of cash book if you are identified, there are two sides. One is the debit sides and other is a credit sides. Debit sides we have a 5 columns: dates, receipts number, LF and amount. And on the other side we have a same 5 columns, that is dates, payments, voucher number, LF and amounts. So this is a very simple specimen format of a cash book. So any type of cash transactions which we want to record it, we can record it in this particular type of specimen cash book accounts. If you are going to compare with the ledger accounts, the ledger accounts is also very much similar to this cash book accounts also. So there are two sides. One is of the debit sides, that is called left hand sides, and the other is a credit sides, which is called right hand side. Any type of a receipt side, that means if the cash is received and if the cash transactions are actually occurred in the sense of if any amount has been received by a company, it would be recorded on the receipt side, it means on the debit side of the cash book. But suppose any expenditures are incurred and any payments made during the particular period, it would be recorded in this particular cash book on the right hand side, it means on the credit side. So we need to identify the transactions regarding the cash. If it is receipts, it would be recorded on the debit side in the cash book, and if it is a payment, then it would be recorded on the credit side of the cash book. Now we want to discuss the importance of a cash book, as the structure of a cash book is like a ledger account. It serves the purpose of both journal as well as ledger. Why it is actually solve both the purpose? Because of the cash book, it's actually prepared all the transactions directly in the cash book, but it looks like a ledger accounts also. So it means that when you prepared a cash book, you don't have to prepare a separate cash and bank ledger accounts in your ledger book. So in that sense, the sole traders and the company or a businessman can save time and labor for the preparations and escaping for the preparation of a separate ledger accounts of cash and bank. Another importance is cash book is maintained separate from the journal. Therefore, the responsibility of a preparing of cash book can be allotted to the different person or a separate person. So the person who are preparing a journal proper or a journal entries, the same person may not be prepared a cash book. You can allocate this work to the separate person. So in that sense, the work allocation would be divided and we would be getting a good accuracy work from the different person. So the person who would be allotted separately to prepare a cash book, he can be focused only to prepare a cash book and getting a good quality of outcome, and without error he can prepare a particular part of cash book. In that sense, the benefit of a division of labor can be taken through this separate cash book prepared. Another importance is cash book can be known as a daily or at the end of the given period of time also. So company has to decide the cash book has to be prepared on a daily basis, on a weekly basis, on a fortnightly basis, on a monthly basis. So in that sense, they can prepare the cash book in a number of ways. Another importance is if the balance of cash book is worked out daily, then the physical cash balance can be compared with it and any error of cash embezzlement can be identified, can be noted immediately. So in that sense, whenever they prepared a cash balance, and if it is prepared daily basis, they can definitely check their daily cash book balance with the physical cash balance, and if it is compared and if it is tallied, and there would be no errors and no differences, it would be identified that the cash balance is equivalent to whatever has been written and recorded in the books of accounts. The next another importance is, as per the requirement of business, the nature and volume of transaction, cash book can be prepared in a various different types. So that means it can be prepared as a simple cash book, it can be prepared a 2-columnar cash book, or maybe you can prepare a 3-columnar cash book, like a cash, bank and discount column can be included in this particular regard. So this is what all about the importance of cash book. In this sense, you can see the types of cash book. There are a necessity of the business or a profession. Cash book can be prepared as per the any of this particular requirement. Maybe if the company have a most of the cash transaction only, they may be prepared a simple cash book only. As I already mentioned and showing in a chart, in a draft, that you can identify the simply cash book, only cash column would be recorded and cash column has been prepared and all the cash transactions are going to record as per as the receipts or payments. Maybe if the businessmen have a different type of transactions, like cash and bank transactions are there, maybe cash and discount transactions are there, maybe bank and discount transactions are there, then in that sense they may be prepared a 2-columnar cash book accounts. So in 2-columnar cash book, either they prepared a cash and discount column, and maybe they prepared a cash and bank column, or maybe they prepared bank and discount column also. And the another options also they have, if the company have a huge transaction or a businessman have a huge transactions for all the 3 category, like a cash, discount and bank, then they will prepare all 3 columnars cash book. That is, cash column, discount column and bank column are included in a one cash book, and the 3 columnar cash book will be prepared. So this is what the types of cash book. Another point is closing cash balance. This is a very important part when you are preparing a cash book. In a simple cash book, on the debit side, we are supposed to write a opening cash balance, and its opening cash balance would be written on the receipt side as a first item. On the debit side, on the receipt side, wherever the transactions are occurred. So all the different transactions on the stipulated period or a particular period would be recorded as it is a receipt or maybe a payment. Suppose all the receipts transactions are there, it would be recorded on the receipt side, and if you have a payments transactions, it would be recorded on the payment sides. At the end of the particular day or a particular period, we are closing this cash accounts and identified what would be the closing cash balance at the end of the particular period. And for that, we need to identify the how much amount of total of the receipt side and how much amount of the total of the payment sides, and the payment side total would be deducted from the total of the receipt side and find out the closing balance. That the amount difference at the end of the particular period, difference between the receipts and payment, it is a closing balance of the cash book. So the total of the receipt side of a simple cash book can never be less than the total of the payment side. Why? Because of the company or a businessman have a surplus cash, then and then only they may be having some expenditures on a cash basis. Because of the cash is always a part of a surplus than the deficit. This is what all about the closing cash balance. Here it is at the end of the first part of this cash book.
Dr. Baba Sahib Ambedkar Open University.